This is a long-range chart of the spot price of silver. It goes back to the first quarter of 2009. I just want to make a couple simple observations about the price actions that goes on over a longer period of time and market sentiment when people are getting caught up in a bullish trend. If we notice back in end of August 2010, the price of silver was around 1850. And in January, first week of January in 2011, the price was about 30.50. You know, what I keep noticing, no matter back how far back you go, unless you're going back to like 1979, 1980, the price of silver really hasn't doubled when it hit a low or a pullback or it was sitting at a plateau for a while. And when it finally got on a bull trend, the price of silver never really doubled, even when it went from 26 to 47. It didn't go to 52, it went to 47. That was a very strong bull trend. I think there's something critical about this $50 level, and I know Max Kaiser said that's a breaking point for JP Morgan. I don't know how he really comes up with that, and I wish he'd explain that better in black and white with numbers. But he might be correct because of the way I saw how they had to do 5 margin rate increases in 2 weeks, and you know, the wee hours in the morning in the Asian markets and all this type of stuff. I also think there was a fear of it going back to 50 over here because I'm going to look at this chart real quick. Not that one, this one. The currencies, the one currency that was really going strong was the Swiss franc, and that they revalued it, they adjusted it so it was more pegged with the euro, and they dropped it. So people were pouring into the Swiss franc because they felt that you know, it's a safe haven. Then also, even with the Japanese yen, even though it's not on this chart, they revalued the Japanese yen. But when they did this to the Swiss franc, a lot of people were pointing out, well, we do have a world currency in safe haven. It's called gold. So, you know, when they, in other words, the investors that were in the Swiss franc would have moved over into gold. That is why they had to drop it, because if gold moves up, silver's going to follow at one point in time. And even you're talking with the gold-silver ratio, could have even the price being the same in gold about 1800, 1900, if the gold-silver ratio started changing back the way it was earlier in the year, the price of silver would have went over $50 an ounce. I think there's something very fearful about that price. I know Max Kaiser said that, and not that I'm just taking his word for it, but it seems like there is some kind of fear at this level. It could be. What I'm doing, I think, with my electronic funds is that I think this next time they have a QE3, and actually QE2 is the main reason silver really got an extra push upward, including all the commodities. You know, beyond the fundamental reasons for owning silver, you know, debt crisis and all this type of stuff. But I think the next time there may be a pullback, might be around $64, $65. So in the case of PSLV, I'm going to dump it and wait for a pullback and buy into more physical when it drops below 50. That'll be the plan, but I don't know if that's going to come out exactly, but that's what I'm going to do. If it doesn't, I'll be holding on to cash for some time and doing something else. I did make another chart on this net Danny, and I was messing around with it. Blue is the silver, gold is the yellow, and then they got the two oil prices down here, red being the Brent, black is the WTI, and I threw the dollar index on the bottom because it shows that it's been decreasing just even in the last 5 years as an average. It doesn't really show too much of a difference because these numbers, the more graphics you show in comparison, the less, you know, you're not going to show as much detail. It's actually kind of a busy chart, but I do want to point out that, you know, gold and silver are far outperform oil, and I knew this in the long range. The reason I'm into oil is for a specific reason, and I know this happened in July 2008. Oil actually did better than silver and gold. What I expect, and I'm partly going by what Lindsey Williams said, and I know he's been off for his predictions for this year, but as far as the timetable, but the events have been on correct, and I just, I'll patiently hold on. So who knows? I mean, there could very well be an attack by Israel or a strike by Israel against the Iran nuclear program, or whatever you believe. It's, well, I personally think it's for weapons, because of other reasons, not because of that stuff the Atomic Energy Commission said, but for other common sense reasons. I think it's for nuclear weapons. They got too much damn natural gas and oil to be messing around with that stuff. Is one little quick reason. But what happened here is that when the price of oil spiked, it will knock down the silver prices temporarily. I don't think in this case, I don't think the oil is just going to drop off, because I think the price of oil spikes because of some kind of conflict in the Middle East. I think it's going to stay spiked for at least a year. So that could be very bad for all the metals in a short term. So that's my bet. I plan when this occurs, if it occurs, don't do all that time going to physical silver. It's a risk, but that's the way I think it's going to play out. So that's what I'm playing. I just want to explain that, because I don't actually believe in oil in this long term. I think I would not stick. Anyway, I want to get on to palladium here real quick. I think this is a very good long-term metal. It's actually going to see the price of gold at one point in time. The price is depressed right now because Russia's dumped so much palladium on the market. They must have dumped many millions of ounces. And a lot of the stories in early 2011 were contrary to what their stockpiles must have been. Because in early 2011, they're talking like, and also even a couple of years ago, that the Russian stockpiles were nearly depleted. So they had a record year for palladium demand. It was up 33% around approximately from the year before. Plus, the Russian mine, Norsk, up in northern Russia, is the #1 palladium mine producer in the world. It was down on their palladium production from 2010 to 2011. So they dumped a whole pile of palladium on the market. That's what drove it down, besides the margin rate increases, but that's what drove it down just recently, the announcement that they dumped the large supply in the market. But the car production's going up across the world, and globally car production's going up. 55% of palladium is used in automotive catalytic converters, and it goes in the same products that silver does, like cell phones, laptops, computers, LED monitors, and things like that, all kinds of electronics. It's got widespread usage. So, the metal actually is probably going to, from the price point it is now, 2012, it'd probably be around, I don't know, $950 to maybe $1,000 an ounce, I would think. And at some point in time, long range, it's going to be worth more than gold. And I think gold is going to go to an astronomical level, to tell you the truth. So I think palladium is going to be that much more astronomical. I think it's a very good. I want to say something else about gold. I'm a little worried about when you go to turn it in, because if they come up with a new currency or something like that. Considering that it's not industrial, really, it's really kind of like a thing that central banks stick in vaults mostly, store value. I'd almost think they could pretty much screw you on a trading price. In the case of silver and palladium, I don't think they're going to be able to do that at all, because it's used in industry. If the stuff is rare, oh well, too bad, because you could say, you could just sell it to somebody who's using palladium in an industry, or silver, I don't think they can mess with the price, because it's actually consumed, so those are much better bets. But in the price of gold, I can see that there could be a problem like that. They could just tell you it's illegal, or they could just set a price and say this is what it is, because, you're dealing with central banks when you're dealing with gold. It isn't an industry metal. Silver is a hell of a lot better metal for that reason, and palladium is a better alternative, or platinum, than gold for that reason, because it's industrial use. And as far as the industry that palladium's in, it doesn't look like there's going to be any kind of pullback from what I could tell in the automotive production. So it's going to keep going up, and the mines don't look like they can come on stronger. So you know, it's very rare stuff. I'm going to point out this other thing about Japan, and I was watching Brother John F. He was talking about, you know, how the United States, people in the United States started buying into gold and silver. Well, I started thinking about Japan. Well, you know what? They got a savings rate much, much, much higher than, well, maybe the rate is not as high, but their savings that they already saved is much bigger than the United States per capita. But I was interested in that. I look at this chart. It's the Sources Bank of Japan and Citigroup in the United States, right? As far as real liquid assets, like the Americans might have 14% of their money in cash money markets. Japanese got 55% with 0% interest. It makes you wonder, you know, with they have in their country, their public debt is way over twice to the gross domestic product, way over twice. It's a much worse public debt as a percentage of their gross domestic product than in Greece or any place in Europe, any country in Europe, and definitely more than twice as bad percentage-wise than in the United States as far as public debt goes. So, you know, they can very easily have a serious crisis over there even before Europe does, even though you don't hear about it in the media left and right. What would happen then? People would be going, oh, they should be doing it now, but I don't know why. I think, well, it's a more conservative society, but they can actually pour into the metals more than the Americans could. They got a very good savings, and a lot of it's a lot more liquid than the United States. So this country could be very bullish for the metals, you know, and maybe even in the short run. But getting back to silver, again, I think there's something about this price point, about this $50 mark, and I know Max Kaiser kept saying they're going to break JPM at $50. Well, it seems like there's a major fear of that. So what I think is that what I'm going to do with the PSLV, when silver gets over $60 spot, I'm dumping 100% of it, waiting for a pullback. Hopefully there will be one, you know, I'm assuming there will be one, and go into physical at that time, you know. And you know, you can say the physical is more money, but you know, you're selling PSLV at $60 spot, and premium on a PSLV is going to be even higher too. It's actually work out better. But that's what I plan to do, so I'm going to be a little upfront on what I'm trying to accomplish here.